Hi everyone, I'm Debbie Roberts, owner and financial advisor at Property Apprentice. Join us today for the Week in Review, where I'll talk about current events for the everyday investor and home buyer. Our topics for this week, first up from landlords.co.nz on the 18th of July, landlords keen on KiwiSaver for tenancy bonds. Second topic from Oneroof on the 17th of July, desperate homeowners turning to third-tier lenders to stave off mortgagee sales. Third topic from interest.co.nz on the 20th of July, real estate agency commissions picked up in the second quarter but remain soft in Auckland. Fourth topic for this week in review from Oneroof on the 20th of July, inflation at 6%. Should homeowners be celebrating or worrying about another rate rise? Fifth topic for this week, stuff on the 20th of July, TradeMe property asking prices fall back to 2021 levels. So first up from landlords.co.nz on the 18th of July, landlords keen on KiwiSaver for tenancy bonds. Landlords are supportive of National's election pledge to allow under 30-year-olds to use KiwiSaver for tenancy bonds, according to Peter Lewis, Vice President of the New Zealand Property Investors Federation, or the NZPIF. This proposal aims to make rental bonds more accessible, especially for students who might find it challenging to come up with the required bond amount, such as $2,000 for a $500 a week tenancy. Under National's plan, students can transfer money from their KiwiSaver to tenancy services and have it returned to their savings at the end of the tenancy. The bond can also be transferred to a new tenancy with a 5-year cap on the arrangement. The main concern for landlords is the refund of the bond, as it can legally cover unpaid rent, services, or property damages. However, National's housing spokesman, Chris Bishop, addresses this by diverting the bond refund process through the tenancy tribunal, ensuring it goes back into the KiwiSaver. Lewis acknowledges that landlords would generally be pleased with a well-designed system to achieve this, essentially making it the individual renter's money in KiwiSaver. He also suggests that a system allowing students to pay back the bond gradually, like $100 a month, would be beneficial, considering that many students will have completed their studies or have accumulated money from part-time jobs over 5 years. On a separate note, Lewis has discussed the idea of incorporating a pet bond into rentals with Bishop. Currently, landlords face difficulties in recovering repair costs if they allow pets in rentals due to potential damages. Bishop has suggested the possibility of a separate pet bond or an insurance system where tenants could cover the cost of pet-related damages, which could increase landlords' willingness to permit pets in suitable properties. Overall, Lewis believes finding solutions that balance the interest of both landlords and tenants regarding rental bonds and pets could lead to positive outcomes. Second topic from this week in review, Oneroof on the 17th of July, desperate homeowners turning to third-tier lenders to stave off mortgagee sales. Stressed homeowners facing the risk of property repossession by their lenders are seeking assistance from third-tier finance companies, as reported by Oneroof. Mortgage advisor Jonathan Battersby, whose company SOS Non-Bank specialises in private lending solutions for those rejected by banks, and he's seen a significant increase in inquiries from distressed homeowners. This year, SOS Non-Bank has already helped around 25 clients facing potential home loss, compared to around 5 last year. The rise in mortgage rates soaring from below 3% to above 7% has hit homeowners hard, leading to an increase in mortgage stress. Some homeowners are struggling to afford the higher rates, particularly in areas like Hamilton and Auckland, where the mortgage amount is comparable to the property value. This has led to an increase in arrears on mortgage accounts, as reported by credit bureau Equifax. Battersby helps clients who've received a Property Law Act or a PLA notice, which precedes a mortgagee sale, by connecting them with third-tier finance companies or private lenders for short-term loans of up to 12 months. These lenders generally charge higher interest rates and are more willing to take on higher-risk customers. However, not all third-tier lenders consider clients with PLA notices, and financing can be challenging if the property's value has decreased, resulting in insufficient or negative equity. Real estate agents like Rubal Singh from Ray White Manukau have noticed property traders facing difficulties, especially those who bought properties in 2021 with the intention to resell at a profit, but were unable to do so. Some clients are seeking ways to hold on to their properties in hopes of the market rebounding. Overall, the housing market's changes, such as increased interest rates and market fluctuations, have left many homeowners in distress, seeking alternative solutions to prevent losing their properties. If you'd like to learn more about investing in property because you could potentially help some of these distressed owners out of their financial position, then join me at one of our free events called How to Succeed with Property Investing in 2023. I'll discuss strategies for successful investing from my perspective as a financial advisor, and these are available live online or in person. Check out propertyapprentice.co.nz for upcoming dates and register today. We don't sell property, so it's all about increasing your knowledge to reduce your risk. If you've already been to one of our free events and would like to find out more about how we can help you to reach your financial goals, you can also book a no-obligation phone call or meeting with my husband, Paul Roberts, via the website. That's propertyapprentice.co.nz. Third topic for this week in review from interest.co.nz on the 20th of July. Real estate agency commissions picked up in the second quarter but remained soft in Auckland. The real estate industry experienced a positive trend in the second quarter of this year, witnessing a 5.4% increase in estimated industry revenue from residential commissions compared to the same period last year. According to interest.co.nz, real estate agencies across the country earned approximately $398 million in gross residential sales commissions during quarter two of 2023, representing a $20 million or 5.4% rise from quarter two 2022. Despite this improvement, the industry's revenue is still below the estimated $592 million earned in the second quarter of 2021, which was part of the housing boom. However, it surpassed the estimated $391 million earned in quarter two of 2019, before the outbreak of the COVID-19 pandemic, indicating a return to the pre-pandemic levels. The overall sales revenue recovery is apparent in the quarterly trend graph. Nevertheless, the Auckland market remains relatively soft, with estimated gross commission revenue in the region down by 10.6% in quarter two of this year compared to the same period last year, despite a similar number of properties being sold. This suggests that weaker selling prices in Auckland have led to lower average commission levels, which isn't surprising considering the fact that we've had quite a significant decrease in values in Auckland. On the other hand, other main centres have shown positive results, with the Wellington region witnessing a 6.7% increase in estimated commission revenue compared to a year ago, while Canterbury's revenue remained almost unchanged. Although the overall improvement in revenues a relief for most agencies after the market decline following the 2021 boom, their commission revenue streams haven't seen significant changes compared to pre-pandemic levels unless they've gained or lost market share to other players. Fourth topic for this week in review from Oneroof on the 20th of July, inflation at 6%. Should homeowners be celebrating or worrying about another rate rise? Economists and property experts suggest that while inflation's falling, it might be premature for homeowners to celebrate just yet. The recent Consumer Price Index, or CPI, inflation figures for April to June show a decline to 6%, down from last year's peak of 7.3%. This 6% figure is in line with the Reserve Bank of New Zealand's expectation of 6.1% and slightly above the consensus among banks at 5.9%. Lower inflation is a positive sign, as it would eventually lead to a decrease in interest rates and attract buyers back into the property market. However, experts believe that the fall in inflation won't have an immediate significant impact on the housing market. Although the OCR has been kept on hold at 5.5%, it's expected that it has peaked, but it might take 9 to 12 months before rates begin to decline. It also might not take that long. Nobody really knows, do they? The Reserve Bank of New Zealand's inflation target range of 1 to 3% might not be achieved soon due to underlying price pressures and other prices not falling as quickly as desired. Overall, the decline in CPI inflation is seen as a step in the right direction, for the housing market stabilisation and potential recovery later this year. While interest rates might not drop significantly yet, the prospect of a downward trend in inflation is positive news for the long term. Topic number 5 from Stuff on the 20th of July, TradeMe property asking prices fall back to 2021 levels. Average asking prices for properties listed on TradeMe Property have returned to August 2021 levels, with the national average asking price in June being $841,050, which is down from $850,150 in the previous month. This shows a slowdown in the rate of price decline, indicating that price falls are easing compared to earlier months. In March, the national average reached a record high of $971,450, but it has since cooled down, declining by 9.1% annually in June. The Auckland region's average asking price was $1.05 million in June, down from $1.06 million in the previous month. And this represents a 10.8% annual decrease compared to the same time last year. The Wellington region experienced a larger annual price decline of 13.2%, leaving its average asking price at $813,200 in June. However, the West Coast was an exception, with prices increasing by 3.4%. Listings and demand for properties also declined in June, which is typical for the winter season. Nationally, listings were down 6% compared to the previous year, and demand decreased by 4%. Real Estate Institute's June figures showed that the national median house price had remained unchanged at $780,000 for 3 consecutive months, which is always interesting when you look at statistics, isn't it? We can have the averages showing a decrease and national medians showing, unchanged prices. However, the Real Estate Institute's house price index was up 0.4% in June, which indicates that there's a potential turning point in the market, as we've been suggesting since February. ASB economists noted that the market appeared to be stabilising, while Westpac senior economist Satish Ranchod believed the market had found a base. On the other hand, Quotable Value Operations Manager James Wilson warned that while price falls were easing, the market might experience volatility in the coming months, suggesting that a smooth landing might not be guaranteed. My thoughts are on this, that we're in the middle of winter, coming up to an election, a general election in New Zealand, and, coming through the bottom of the downturn. So no surprises that there's a little bit of conflicting data at the moment. I think in hindsight, we will certainly be able to look back and say that the bottom of the market was February. That was the turning point. I'm not suggesting that we're going to have a boom anytime soon, although according to some economists, the fear of missing out is certainly starting to return to the property market. For smart buyers, it represents opportunities, but for the uninformed, it does carry risks. And we know you don't want to make mistakes and overpay for a property, which is why we want to give you as much information as we can before you make a decision. Join us on one of our How to Succeed with Property Investing in 2023 events. As an experienced property investor and licensed financial advisor, I'll be sharing valuable insights, proven strategies, and expert tips to help you on your journey. And we're excited to welcome everyone, whether you're taking your first steps as a first home buyer or if you're an experienced investor. Best of all, these sessions are completely free. So come along and join us either online or in our office in Auckland. We value your questions and want to make sure you get all the information you need, so feel free to engage with us during these sessions. Visit propertyapprentice.co.nz today to secure your spot and register for one of our events. Alternatively, you can book a no-obligation phone call or meeting with my husband, Paul Roberts, through our website as well. Thanks for listening.